Now, a new economic report out now shows a silver lining. All Americans battle record high inflation and skyrocketing mortgage rates. Plus, the Fed is expected to announce yet another rate hike next month. Isabel Rosales joins us live right now from Washington, D.C. to break down what you need to know and what it means all to you. Isabel.
Lay, good evening to you. Wall Street is certainly responding to this report with better than expected numbers. With the closing bell, the Dow Jones up nearly 200 points.
A sign of hope for economic recovery. The latest data shows the gross domestic product grew 2.6%. It's a turnaround from the negative of 1.6% in the first quarter and negative 0.6% in the second.
Great economic report today.
The report by the Bureau of Economic Analysis offering a sign of relief for the White House as President Joe Biden looks to tout economic successes heading into the midterms.
When you combine this with reports that we've seen recently in the labor market, this does show that the economy continues to move forward.
More spending in travel and dining out, balanced with less spending in durable goods, fueling the economic growth. But experts warn Americans should still brace for a recession.
I think the odds that next year we get a recession are very high because inflation's still high, the Federal Reserve's still fighting inflation, and also the whole world is going into recession.
Other factors of concern to consumers include a housing market cool down as mortgage rates top 7% for the first time since 2002. All coming on the heels of interest rates on the rise as the Fed works to cool white-hot inflation.
That doesn't feel great always. We see rising interest rates for mortgages, as you say, all kinds of debt. At the same time, this is necessary in order to avoid a hard landing.
And Lay, there is a caveat to this report where we saw fluctuations to factors like international trade. That could be just a one-off, something that we might not see reflected in future quarters. Lay.
What does this mean, this new data mean for the Federal Reserve and the possibility of even more interest rate hikes?
Right. Well, Lay, the central bank will certainly see the consumer spending slow down as good news. It has been working for months to bring under control that white-hot inflation, to slow down the economy and what it calls a soft landing, that sweet spot. Too much of it, and that's a hard landing. That's a recession. So it's been doing that with unprecedented rate hikes, 5 of them so far this year. All of this data, nonetheless, inflation still at a 40-year high of 8.2%. What this means is that next week they have a big meeting. They're probably going to raise and hike that interest rate again by 0.75%, 75 basis points, and probably again come December to work further into bringing down this record high inflation. Lay.
Certainly things to be looking out for. Isabel Rosales live for us in the nation's capital today. Isabel, thank you so much.